Welcome back to this morning, 6:34 on this Monday edition of the Real Investment Show. Getting ready to wrap up the month of March here, March Madness, and
there is no March Madness.
I know it was just madness for the entire month, though. It was March Madness all month long.
The madness marches on.
Exactly, and we're going to April Insanity. So,
yeah, no fooling.
This is going to be interesting. When we get to the end of all this, is that. I'm curious as to, we come out of this and people kind of get back to their normal lives. And, it's, after being kind of cramped, I think it's been a good thing, right? And in a lot of ways, it's been a good thing because, like, in my family, we're so busy all the time. I mean, it's track, it's football, it's dance, it's here, it's there. It's, constantly, shuttling people around and having all these things we've got to do. And everybody's very busy. And, there's not a lot of, and everybody gets home at night from work and school and activities, and everybody's tired. And, it's just not a lot of, time to, really just kind of integrate.
Quality time.
Yeah, quality time. And, I guess there's a limit to quality time too, but joking. But no, it's actually been great. I mean, our kids have been hanging out at the house. We've been spending a lot of time together, just hanging out. Like yesterday, it was beautiful outside. We hung outside in the backyard and just had dinner and visited, and it was fun, right? I mean, it's been a good time to reconnect, and I hope that people take the silver lining out of all this is that this is a good time to just kind of reconnect with family, because once this is over, we're going to go back to the way we were, and it's try to remember that this has been a good opportunity to connect with the family and maybe keep that going even after we do get back, because we're going to get back to our busy lives. I mean, this is going to pass at some point. We're all going to get back to being busy and going here and going there and doing things. But, take advantage of this while you have it in a way. And, it kind of reminds me of that video I saw over the weekend. I talked about last week is like, A, you're, locked up with your wife. B, I'll take it. Whatever B is, I'll take it. I don't care what it is.
Yeah. I saw somebody post, says, no matter how bad it is right now, just remember, someone is quarantined with your ex.
Exactly. Yeah. That's a whole nother story.
Yeah.
Anyway. So a couple of things. So coming up Thursday, this Thursday, we are having our 2020 Investment Summit. And we've got some great guests lined up. We've got Jeffrey Marcus from TPA Research. We've got Teddy Valley from Pravalley Global Capital. Thomas Thornton from Hedge Fund Telemetry, Michael Leibowitz. Basically, we were talking all about kind of the Fed, the stimulus, markets, just kind of our outlook for the rest of this year, what happens to markets, where we think we're going to wind up. So there's a lot of really great information. It's absolutely free. All you have to do is go by the website and click there's a big blue banner we've put on the front page where we normally put our 3 minutes on markets and money. It's right there on the front page, big blue banner. Just click the register here. But now, here's the thing. If you already get our weekly newsletter, you don't have to do anything, because that's the list we're using. We're going to email the link out to. So if you already receive our weekly newsletter, you already receive our Technically Speaking post on Tuesdays by email, you don't need to do anything. Already got you covered. Because, again, but if you don't get our newsletter and you don't get our Technically Speaking post, go to the website. There's a blue banner for the summit. Just click that banner. Get registered. All you got to do is put your email address in. That's all we need. And then we're going to send you a link, because we're not going to publish this publicly. We're just going to keep this private between you and us. So you got to be on the list. And if you're on the list, you get the email link. But again, it's going to be a really great summit. We've got this broken down into a playlist, so you can watch it at your leisure once we send you the link. And that way, but again, since you've been watched, the Lion King or whatever that is on television right now. What's the name of that show?
Johnny Tiger or something like that.
Yeah. Well, so if you watch that one, you're out of stuff to watch. You can watch this. So
Lion King.
it's whatever it is. It's tigers, lions, bears. Oh my.
my.
So there you go. So anyway, but we'll have that out on Thursday morning. We'll release that around 7 o'clock in the morning, email you out. So you'll get that link and you can watch them. But so just be sure you get by the website, again, realinvestmentadvice.com, and just click on the the 2020 Investment Summit banner and get registered if you're not registered already. We'll take care of you. Okay. Interestingly enough, I've been getting a few emails, and they've all kind of been asking me the same questions, like, well, this time is different than it was in 2008 because, we're doing all this stimulus, but, this isn't like 2008 because no banks have failed. Well, that's not really the case. If you take a look at what the Federal Reserve is doing, the Federal Reserve is literally flooding the system with trillions of dollars worth of liquidity. Now, the reason they're doing that, they're buying corporate debt, they're buying mortgage debt, they're buying agency debt. They're buying every literal piece of debt kind of on the street. They're buying it in some shape, form, or fashion. And the reason they're doing that is to keep banks operating. Because if they weren't doing that, you would have a whole variety of long-term capital management bombs all at once. And it's interesting because we talked about Millennial and Citadel and Point72 and some of these other massive hedge funds that take reserves and then lever them 10 times and invest those. And those were all on the brink of major margin calls and liquidations. And that was what kind of really caused the initial, bomb that went off in the financial markets a couple of weeks ago, was those hedge funds becoming illiquid. So the Federal Reserve jumps in, and surprisingly enough, those hedge funds have all had a massive recovery over the last week. In fact, the majority of their losses were wiped out last week. In fact, they're in pretty good shape. In fact, one of them even turned a profit for the year so far. So, this is, but if had it not been for that support, the underlying banks that were basically extending them the leverage would have all cascaded into that default. So, in a way, the Federal Reserve has postponed the crisis, which is a good thing, right? The biggest risk of a crisis ultimately is the failure of your bank system. That's really, when you go back and look at 2008, that was the big deal. The other side of the equation, of course, is the debt defaults that inevitably come, and those are on the way. And we're going to get more debt defaults. We're going to see a lot of companies really struggling to try to get financing, et cetera. Banks are going to draw back their lending. They are going to get much more concerned about who they loan money to and the ease at which they loan money. And again, we're going to see bailouts. We're already starting to see that now. So Capital One Financial, the bank where they get Samuel L. Jackson says, "What's in your wallet?" Right? What's in your wallet is going to be taxpayer dollars as they get bailed out. The CFTC, which is the Futures Trading Commission, they are providing relief to Capital One Financial. Now, Capital One has a lot of exposure. We've talked about this before on the show, is that there's a lot of banks that have a lot of risk here, and they're not necessarily all major banks like Capital One Financial. There's a lot of mid-sized regional banks that have extended a lot of loans and credit to the oil and gas drilling sector. We've talked about before that roughly 40% of your CCC rated bonds, now these are the junkiest of junk bonds that you have in your high yield fund, right? I have a high yield fund because I get a higher yield than everybody else. Yeah, because you own junk bonds. That's what high yield is a marketing term for. That's junk. CCC credit is some of the junkiest of the junk. And a lot of that is energy debt. Capital One Financial has a lot of exposure to the oil and gas sector, but also a lot of regional kind of mid-sized banks really loaned a lot of money to that space. So there's a lot of risk to the regional mid-sized banks. There's a lot of risk there of defaults. And then, like I said, with Capital One Financial, the CFTC said that it's temporarily exempting Capital One Financial from a requirement to register as a major swap participant. even though its growing energy swaps exposure would technically require it to do so by the end of the next quarter. And since the bank was not named, traders quickly turned their attention to whatever the crisis du jour was at the moment. But late last week, Reuters reported that the bank in question was Virginia-based Capital One Financial, best known for their questionable retail lending and credit card commercials. We're not out of the woods. Now, my point about this is we're not out of the woods on this just yet. Yes, the Federal Reserve has done a lot of monetary stimulus that will offset the brunt of a lot of the defaults that would have occurred, but we're still not out of the woods on this just yet. So my point is simply, be careful here. Be careful about getting too overly excited and getting too exposed to the markets. Pick your spots here. Pick your points where you want to be, but make sure and maintain some ability to control your risk, because again, there's too many unknowns that are simply out there that could negatively shock the markets at a moment's notice. So just be careful. We'll be right back after the break. I'm your host, Lance Roberts. Don't go away. Just a man and his will to survive. I am a tiger, it's a thrill of the fight. Rising up to the challenge of our rival. Gathering up, no survivors, cause it's spring of the night. Land is watching us all with the eye of the tiger.
Got questions for Lance later? Ask now at realinvestmentadvice.com.